Hi everyone. Today we are going to discuss about the concept of accounting equation and its impact on the business transaction. So as we understood in the previous session, what is accounting equation? So accounting equation is assets is equal to liabilities plus capital. Now we will understand this concept with the help of examples of business transactions. So this concept is the fundamental concept for the modern financial accounting. Now, let's understand what is assets. So we know the assets are nothing but the resources which are owned by the business to generate future earnings, which is equal to liabilities plus capital. So what are liabilities? Liabilities are nothing but the obligations or the debts owed to the outside parties. For example, creditors or loans. And then comes the capital. Capital is nothing but the owner's personal investments or equity in the business. Now, let's go to the examples, starting with the business. Now, Gopal has commenced his business with 75,000 as capital. So what will be the accounting equation which will look like? We know what is the how accounting equation looks like. Assets is equal to liabilities plus capital. Now Gopal has started his business. So what will increase? Assets will increase, cash, and on the other hand, liabilities would increase, capital, because he has infused that much amount of the capital, so capital would increase. Now, let's say in the second business transaction, he has bought furniture worth of 5,000 in cash. So what will happen? The effect of this, it will increase one asset, which is furniture, and decrease another asset, which is cash, because he has bought furniture on cash basis. Okay. So net change on the total assets would remain zero. Now let's come to another transaction, which is buying the goods for cash. Now he has purchased goods worth 20,000 in cash. So what will happen? Again, this will reallocate liquid cash into inventory. So your inventory of stock would increase by 20,000 and the cash would decrease by 20,000. Now let's come to the next transaction. Suppose he has purchased goods on credit basis. So what will be the effect of this action? Purchase of goods has been, for example, let's say 16,000 he has purchased goods on credit. So when you buy on credit, there is no immediate cash flow, right? So your assets would increase by 16,000 inventory of goods, and parallelly, your liabilities would also increase by 16,000 to make the accounting equation balanced. Now let's understand the effect of another transaction. So suppose he sold goods costing 12,000 for 15,000 on credit basis. So the goods worth 12,000, he sold it for 15,000. So what will be the impact of this transaction? This will increase your profit because he has earned the profit of rupees 3,000. So the profit accumulates where it will be added in the capital. So it will increase your capital base. All the retained earnings and the profits would add into capital of the organization. Now let's understand another example of paying the business expenses. Now let's say he pays 1,000 rupees for rent, which affects the cash position and the owner's equity both. So how it will happen? When you pay your expenses, what will happen? You will pay through cash. So your cash balance would decrease by 1,000 rupees. And similarly, your capital would be reduced because expenses you will charge to P&L account. So once you charge your expenses, your profit would reduce. So reduced profit will be added to capital. So here we will reduce the capital by 1,000 rupees. So finally, what will be the dual impact we will see? Assets is equal to liabilities plus capital, which will hold true in all situations. So what is the final accounting equation looks like here? It will be 49,000 of cash. So you started with 75,000, but out of 75,000, Gopal took the furniture of 5,000 rupees, stock worth 24,000 rupees, and he sold some inventory for 15,000 rupees. So debtors would be 15,000 rupees because he has not realized cash yet. So it will look like 49,000 plus 5,000 plus 24,000 plus 15,000 because he has made 3,000 additional profit as well. Now the liabilities would be 16,000 because in the above example, we understood that he has purchased goods on credit at 16,000. So when he purchased goods, his liabilities would increase and the goods also would increase on the other hand, the stock. So, and his capital would also increase by 2,000 rupees. Why 2,000? Because earlier he made a profit of 3,000. He sold the goods 12,000 for worth 12,000 for 15,000. So he made a profit of 3,000. However, he also incurred some business expenses of rupees 1,000. So the net impact was 2,000 rupees. So these 2,000s were added to the capital of the organization. So he started with 75,000. Initially, when we saw our example, what was the capital? Capital was 75,000. So he started with 75,000, added 2,000 of 3,000 of additional profit, subtracted 1,000 expenses which he paid, which would reduce his profit. So net would be 77,000. So in total, if you see the assets would be 93,000. Liabilities plus capital put together would be 93,000. So the equation would remain balanced. Assets is equal to liabilities plus capital. So with this concept, we can also learn the dual aspect principle. So what do we mean by dual aspect principle? That every business transaction has twofold effects. So it will always affect assets and on the other hand, liability or the capital to make the balance equal. So your asset side and your liability would always balance with each other. So this was the concept of accounting equation which we learned today. If you have any question, please let me know. We will cover that in the next session. Do like and subscribe this video. We will cover more sessions on the accounting equation to understand more on this concept. Do like and subscribe this video. Thank you so much for watching it.